Welcome to Business Breakfast today. It's, of course, the 19th day of August 2026. And now, the Bank of Industry is recording strong investor interest in Nigeria's domestic debt market with its latest 250 billion naira Series 1 fixed rate bond, attracting demand beyond the amount initially offered. The development is providing another indication that investors are willing to commit capital to Nigerian institutions, particularly where the funds are being channeled into productive sectors of the economy. Now, the 250 billion naira issuance is forming part of the Bank of Industry's broader strategy to raise long-term funding for lending to businesses across critical sectors, including manufacturing, infrastructure, and other areas considered important to economic growth. Now, market watchers said the response to the bond is significant because it is demonstrating continued appetite for high-quality Nigerian debt instruments despite the challenges facing the wider economy. For businesses, increased access to institutional financing could help ease some of the pressure created by high borrowing costs and limited access to long-term credit. Now, the BOI is expected to deploy the funds towards financing productive enterprises, making the success of the bonds potentially important not just for investors, but also for manufacturers and other businesses looking for funding to expand operations and create more jobs. Nigeria's 36 states and the Federal Capital Territory are collectively budgeting about 40 trillion naira in 2026, representing a 47% increase compared with the previous year. Now, the sharp rise is reflecting the significant increase in government spending plans across the country as states receive higher revenues while facing growing demands for infrastructure, salaries, healthcare, education, and other public services. Now, the increase is particularly significant because state governments are controlling a large share of public spending outside the federal government. Higher allocations from the Federation account are giving states more resources to work with, but the larger budgets are also raising questions about how much of the money is actually translating into capital projects. Analysis of the 26 budget is showing that while overall spending is rising substantially, the proportion allocated to capital expenditure is declining. This means a larger share of state resources could be going towards recurrent obligations such as personal cost administration and debt servicing. Now, the development is putting greater attention on how efficiently state governments are managing their expanding revenues, with infrastructure deficits still affecting many parts of the country. Analysts say increased allocation will also have a meaningful economic impact if they are converted into productive investment. And for businesses and residents of the country now, the size of state budgets matters because government spending can stimulate economic activities, support local contractors, and improve infrastructure. And now, the Nigerian Exchange and Stanbic IBTC are pushing for deeper use of securities lending as part of efforts to improve liquidity and efficiency in Nigeria's capital market. The initiative is aimed at strengthening trading activities by making it easier for investors and market participants to borrow securities, support market making, and execute more sophisticated investment strategies. And now, security lenders allow an investor to temporarily lend shares to another market participant in exchange for a fee, with the securities later returned. The mechanism is widely used to develop capital markets and can support greater liquidity by increasing the availability of securities for trading. For Nigeria's equity market, expanding securities lending could help address one of its long-standing challenges: relatively low liquidity in some stocks. A deeper lending market could give institutional investors more flexibility while supporting market making and other trading activities. Now, the push is coming as the Nigerian capital market is seeking to attract more institutional and foreign investors and develop products beyond traditional share trading. Greater securities lending activity and could also improve price discovery by allowing investors to take more diverse positions based on their expectations of market movement. For the NGX now, the objective is ultimately to build a more active and effective and efficient market where investors can enter and exit positions more easily. Increased participation and liquidity could strengthen the attractiveness of Nigerian equities and support the broader development of the country's capital market.